And you just had another big announcement where you did and in this environment, it's kind of a big deal because it's a financing deal that was non-dilutive, right? That puts you guys in a pretty good position. Ticker symbol, by the way, is SURG. So, and this is Brian Cox, by the way. I want to make sure everybody knows who it is. CEO. Thanks for coming in, Brian. But a lot of stuff I just threw out, right? In a very short period of time.
I want to give a little foundation on that. And I can go right into the financing because I think that's probably outside of achieving the listing on NASDAQ. I think that's been the single most important. And I actually would say from a business perspective, from a revenue perspective, and from executing the plan, more important than achieving a NASDAQ listing. But to go back to what you're talking about, we had 13 or 14 states in which we were licensed by the FCC to provide subsidized internet access or wireless broadband. And that came about during COVID when a lot of the lower income or inner city folks were not showing up for the homework or the Zoom classrooms, and they were completely boxed out. So the government set aside about $15 billion for starters to get this program going. We were one of the pre-approved companies licensed in 14 states. And then we acquired another company that gave us all 50 states once we realized what we had here. I mean, once this land rush, gold rush, where almost a third of the country qualified for this subsidized program. And you qualify simply by being on any other government subsidy, whether it's Section 8, food stamps, EBT, SSI, veterans pension, WIC. So immigrants qualify as well. So about a third of the country qualified. So we started looking at our growth. And it's the first time in 20 years where, I was an economics major. It was the first time in 20 years where my numbers at the end of the month were not supply and demand, the price and all the factors. It was how many devices could we get our hands on? And that was our sales for the month. And we were running out of devices about week 3 of every month. So my big challenge was no longer getting to NASDAQ. Check, we did that. It wasn't all these other functions of business. It was like, how do I get access to capital in a model where we get reimbursed 30, 60 days later from the from the government, from the FCC? How do I access capital without diluting my shareholders? Because I am the largest shareholder, which is probably something we should always tell on the front end. We have a laser focus model here of protecting our, putting a moat around our cap table and protecting the company while growing as fast as we possibly can. Because I don't want to mom and pop growth this. I'm not looking for 3 to 5% a year. I'm not a blue chip. So with that said, we looked at, God, Tim, I evaluated term sheets this thick, the OIDs, the coupons, convertibility. No, we won't convert. No, this, no, that. And I never could find anything. So finally, I kind of threw it all in the garbage. And I told my CFO, we're going to find something. I'm going to map it out. We're going to build something that we're going to go find it. There has to be people. We're growing a receivable from the United States. We have assets, which are tablets in the millions of dollars. Our receivables now is in the millions of dollars. We have to be able to access capital traditionally without using anything. We're on NASDAQ. That's great. But I do not want to use a public company tool because where we are right now, even though we're in the top 5 companies performing on NASDAQ this year, I believe something like that, I'm not happy with where we are. It's nowhere near where we should be. And I'm not selling stock to gain access to capital. So yeah, we pulled off a financing that allows us to have an initial drawdown based off of the receivable from the United States, which is right at about 10 million a month right now, and still growing every month. And also our assets, which would be the tablet devices that we have purchased and are in our inventory. So our first pull down was 15 million bucks. And what we did with that, we paid down a high interest loan, which is something I used to protect. I wasn't willing to sell stock. So I got a short-term loan to buy devices to prove out the model, to get the receivables up, and then use the receivables to leverage an economic below 10% type line of credit. And what's really cool about this is when I say it's built specifically for this model. So we pull down, we use real numbers. We pull down about 15 million bucks, and we get paid every month as a subsidy for providing services to these lower income folks. Well, that 15 million is divided by 9 and paid back in 9 monthly installments. So it works perfectly with our model. It allows us to, continue to cash flow growth. And then it allows me to grow my borrowing base, where now I can pull down more money as we grow. So I'm incentivized, more customers, more revenue, more access to capital.